Welcome back, everyone, to another one-on-one with Jerry Hall. Today's conversation is with one of my favorite Twitter contributors, the Wolf of all streets. That's right. I've got Mr. Scott coming into the studio, and we're going to chat about financial literacy, his journey, the fact that he embraces the mistakes he's made so he can learn and become a better investor for tomorrow. You know, the interesting kind of common thread you'll find on my channel is exactly that. How can what I do today, whether it be consume content, practice some process or procedure, how can it make me a better investor for tomorrow? I found it to be an incredible conversation. I hope that you enjoy it as much as I enjoy doing it. So let's get right to it. Here it is. The Wolf of all streets, Mr. Scott Melker. Welcome to the show. How are you today, young man?
I'm good, man. Thank you so much for having me. That's the first time I've been called young man in probably 10, 15 years. I'll take it.
Well, you run in a circle of young studs. I'm like that old bull, that maybe was a stud once upon a time, but is now kind of, gotten slower and fatter and kind of moved off to the outskirts of the herd. Just kind of
yeah, but you need that bull. You need that bull. You need the wisdom and the strong presence.
Right on. Well, hey, I got you on the show finally. And you're a guy that obviously I found through Twitter. That was my introduction to you, was through your tweets. And through your tweets and your Twitter profile, I've since found your podcast. Love it, by the way.
Thank you.
Let's go through like just a real quick, because you don't address this a lot in your stuff. The education, previous careers, and what inspired you to like really start leveraging some of these online social media platforms to produce incredible content.
So I guess, starting at the beginning, I've always had, what I would describe as somewhat a charmed life. I've had a very easy, fortunate life, amazing, loving parents who, gave me a great education, which also included, financial literacy. Opening bank accounts when I was, 12 years old and writing my first $10 checks and gaining at that time over 10% interest, which is crazy to think about in the savings accounts. Saving my money, buying stock, those things. I'm not saying it was like a daily education, but they gave me the initial concepts. I was always rambunctious and always loved attention. Have no problem admitting that. I was always in singing groups and I played the piano from when I was 5 competitively, and I was just always on stage. It was like, that was my thing. I love playing sports. I, lettered in a number of sports in high school. I just love to compete, perform. I liked, being the center of attention to whatever degree. Fast forward to college, I went to the University of Pennsylvania in the mid to late 90s. So at that time, finance was it. Everybody was going to, was heading to Wall Street, management consulting, investment banking. They were giving out jobs like Halloween candy. It was like, all you had to do was get through school and you could go work on Wall Street. It was really almost that easy. It was never what I wanted to do, but I was obviously very exposed to it going to school there. I was an anthropology major. I wanted to be Indiana Jones. So I was not studying finance by any stretch. And funny, I wanted to be Indiana Jones until I actually went to an archaeological dig in Israel for a summer. We were in the middle of the desert, and because I was like the American who didn't speak Hebrew, they just made me literally dig and move huge rocks and wheelbarrows all summer. So basically I was like a manual laborer, and I lost the luster for it. But I had an opportunity to go to Wall Street and decided to pass. I had started I should preface all of this by saying that I've tried 100 things and failed at most of them. And so I could talk about all the stupid jobs I had and poor ideas for hours. But at the very core, I decided to focus on music, DJing and producing music. And, I went through all the hardships of being a starving artist for many, many years, caught a break to some degree, and then had a very nice career, for a solid decade before I retired and kind of moved on. And, just the same time that I was sort of becoming the old bull in the music industry, for DJs, as you sort of described, I was getting much older. I had my daughter, and didn't want to really pursue music anymore. So I started focusing more on trading, which was something that I had been doing on the side. And then I found crypto, and it was this magical land of, huge trades. You could make, a lifetime worth of money in a month. And I really came to it for the money, like 100%, no shame admitting that I was there to make dollars, and because I love trading. And I sort of like being there and exposed to it for so long, slowly through osmosis, the actual importance of crypto and Bitcoin and those things start to sink in. And then I finally took the pill, fell down the rabbit hole, I should say, tumbled through, and became really just like, a firm believer in the use case and the importance of cryptocurrency. So like, I still trade, obviously, and I, do all these other sort of like satellite things around the industry. But at the core, I just became very passionate about it and want to share that passion and the importance of it. And, you kind of say, how did I become like, I guess, a social media influencer or whatever? The answer is I have no idea. Okay. Because it was not intended. I didn't see it as a business model. I never knew that all these people would follow me. I was just talking about what I was passionate about, and people started following it. And as has always kind of been the way in my life, then doors started to open, and I just started to kind of go down those paths and see what would happen. And it's led me here, and I have no idea. There's no plan for what's next. I have no idea what's coming. I'm really the type to enjoy the ride. And I now have this platform to share ideas and talk to people, but I don't use it in any way different than I did a year ago or 2 years ago, and I was not as relevant. So it's just a amplified version of the same thing.
Well, having that bullhorn, that loudspeaker, so to speak, that is really global. I'm finding, and I haven't been in this game anywhere near as long as you have, but I'm finding that it's amazing the gravity of these digital platforms. Like the folks that tend to gravitate to me and reach out, make a comment, I'll respond. I can't tell you how many of those have turned into their contacts in my phone now. And we'll exchange either texts. Every once in a while we'll talk, about, maybe it's about trading, maybe it's about this particular asset, maybe it's about the perfect Grey Goose martini. You know what I mean?
Yeah. I know where you're going with this, and I can tell you that I would have never imagined it years ago. Some of the people I talk to every single day, literally every single day, that I do business with, that I trust, that like I send large quantities of money to digitally with, without a bank to insure, are people I've never met in person in my life. Are people that I met on Twitter or met through like somebody introduced us and said, this person has an opportunity, you guys should talk. And, those are people that I trust as much to some degree, or interact with as much as my closest friends and family. And it's really crazy. Yeah. That's
really,
the world
I'm
now.
really impressed with that. One of the things that seems to be has an undercurrent in almost everything that I find you're a part of is this free flow of information. And it tends to maybe not directly stated, but indirectly stated, the context anyway, is financial literacy. Mm-hmm. Now, to me, that I don't want that to become a buzz term, but it does accurately depict this kind of field. And it is amazing how I've spent my almost entire life up until a couple of years ago, with such a small understanding of finance, how money really works, how value transmission really happens, what are the influencers, this, that, and the other thing, dynamics. And so the rabbit hole that I've gone down, that I was introduced to through cryptocurrencies, has been about understanding monetary policy. I did not understand fractional reserve banking until I got
Nobody
to this.
does.
And I was 52 years old, 51 and a half when I got introduced to crypto, and I did not know what fractional reserve banking was. Isn't that amazing that in our country, in our quote unquote public school system, even in our halls of higher academic learning, these things that you would think would be rudimentary, right, don't exist. They're just not there. The information is there, but they're not rolling out curriculum. It's like we're having to do that for each other outside of the system.
Yeah. I wish I had all the statistics in front of me. I actually wrote a huge, long intro to one of my newsletters, probably a month ago. I don't remember, but about this exact topic. And I talk about it a lot. I can tell you probably still the dates of certain battles in the Revolutionary War and where they were fought, but nobody taught me how to balance a checkbook when I was in school. Nobody taught me how to use a credit card. Nobody taught me how to open a savings account. Nobody taught me any of those things. And those are just basic functional knowledge. Like how do I pay my mortgage? You know what I mean? Like those things should be taught in school long before useless facts about wars forgotten, long before, certain complicated math topics maybe that some people won't use. We don't teach the people. I can only speak for the American education system, of course. And it's very different now than it was before, but I fear it's gotten worse, not better. We don't teach people the things that they need to survive in the real world, right? The education system is just fundamentally broken. I mean, when I was a kid, and I'm sure you too, they used to teach us that if we ate white carbs for 75% of our food, that was like the healthy food pyramid, right? Sugar good, fat bad, right? And so, I think that there's a lot of misleading information there. So as you said, it's our job sort of individually and anyone who has a platform to help people catch up. I think that one of the few maybe small benefits to what's happening in the world right now is that people are being awakened at least slightly to how nonsensical and insane those policies you touched on are, to what the central banks are pulling, to the way that money is printing, to what being printed, to maybe what money actually is. And that's where obviously crypto comes in. And, it doesn't have to be the problem, I think, with the crypto industry in general is that the people are too smart for their own good to some degree. And they have a very hard time simplifying the concepts and the importance and the use cases for people who don't understand all of these things. You hear people explain Bitcoin for an hour to someone who doesn't understand it, and that person has a blank stare and talking about nodes and just all the technical parts, when you could really just say, hey, this is like a savings account when you were a kid. This, it's deflating, it grows in value. You could say, hey, have you ever seen refugees cross a border, and to get across the border they take all their possessions as payment? Well, if you had this, that wouldn't happen. Your wealth stays with you, and if you have your seed phrases in your brain, nobody can steal that from you. There's just very simple, obvious things, I believe, that the narrative becomes way more complicated than it needs to be. So I believe in, making every concept as if it was this concept for me when I was 10 and someone was explaining it to me, and I wish that people had explained these things to me, because what we're witnessing or have been witnessing forever, but at this point on a grand scale, it's criminal, and it's abusive to the people, to the citizens, and most of them don't understand. And you can't blame them, because who would have ever taught them? And why would they understand these concepts? Why would they pursue that knowledge? So, I believe it's anyone with a platform and even a mild understanding of these sort of complex topics and concepts to explain them to people and let them know how important it is. And listen, I annoy the shit out of people. So pardon my French, but I will bother people endlessly and just beat them until they finally buy some Bitcoin. But I really do think there are very simple ways to educate people financially and for them to understand what their money is doing and what it really is.
Right. Well, here's the thing. So I have a few years on you, but I'm going to guess you're what, 38, 42. That's about
43.
the age.
I'm 43.
Okay. So I've got 11 years on you. Now, as I went through my high school, junior college period.
I'm listening. My AirPod's dying, so I'm going to take one out and charge it so that we'll have power.
No worries. So as I was going through my my junior high school, junior college kind of period, that is a lot of where I kind of formed my quote unquote world view, right? And how a lot of my relationship to money was kind of formed in those years. With my first dishwashing job at 15, and where I was actually a real employee and taxes were getting taken out and things of that nature.
Yeah, and they gave you a couple bucks for that hard work.
Yeah. Well, I was happy to get it. I grew up in a very, not poor in the form of spirit, love, information, exchange of
money. The
stuff,
classic definition.
But we didn't have money per se. My mom, single mom, worked her ass off for the state of California as a teacher. Anyway, all that aside, so I developed this relationship with money with no education around money other than what I saw in the world, right? So if I could get this for $1 and sell it for $1.50, I'm golden. So how do I sell it for $1.50? Well, you got to learn how to be with people and interact with people. So that's kind of how I went through it. My education around finance was use the skills that I have to make money. And I got good at it, not in the form of investing, being able to evaluate a company, being able to understand business cycles or even, debt cycles, how to leverage this or hedge that. No, that wasn't in my lexicon.
You're a good salesman.
But I was a good salesman, and I was also I had a construction company. I got my license when I was 19. So I could sell myself to a client. Then I had to produce the product to get a referral.
Right.
And that was my game. So not only sell myself, but then deliver.
Yeah.
Well,
a lot of people are good at one or the other.
Well, I happened to get good at the first one and knew enough that if my buddy was really skilled, but he didn't really like talking to people, well, I hire him, bring him on as a partner. Let's go.
You go talk, right?
Well, I mean, it eventually, I think I got to the point it was in my mid to late 40s that I actually wasn't picking up tools anymore.
Right. So you were putting in the work.
But I was putting in work. But anyway, where I'm going with this is, so I have a son. He's 22 now. And since I've gotten into this, because when he was all through his growing up, it was, okay, I'm going to give you opportunities to make money, and your job is to save 10% of that. Because that's how I was taught. That was the worldview I came up in, right? Save some of your money, get good credit, and then start taking it.
Yeah.
Assume debt, make enough money to pay that debt off so that you can get more debt, to get more resources, to earn more capital so that you can pay off the debt. And it was just rinse and repeat. That was my whole deal. Well, my son's now 22. And since I got into crypto, it's been, all right, we're going to learn about compounding interest. We're going to learn about how you got to get off zero. You will never, ever, ever develop wealth saving money. You have to deploy capital into assets that will track or exceed inflation. What is that? You have to learn about that. I mean, it's just this incredible world. And as I got going through this, I started thinking to myself, there's a step even before these young adults, and that's the kids. And then I started thinking to myself, if I could get a couple of people together and put together something like a Money Monkeys program, curriculum, where financial principles are brought in a fun, cute way to kids, maybe we could, if we could get to the root, then get some traction going forward. Because I'm finding the people that come to me asking me questions are people my age, or, you know, they're already well into their adulthood. And they are just as clueless as I've been about financial literacy topics, information, etc. Have you found that to be true also? Or
I think that
am
all
I
people,
an outlier here?
no, I think you're accurate. I think that what people know about money is that they need it to pay for stuff. And that's really the extent of how much they think about it. And most people, they have to think that way, right? It's sort of like you were talking about with your mother. You make enough to put food on the table, and beyond that, who cares, right? Because you can't even see a world where you would have it saved or where there would be more than you needed. And I think that's the reality for a huge, you know, the bulk of the population. Um, you know, I think that we live in a world. I always like think about Fight Club when I think about this. You know, the movie Fight Club, where it's like it's all consumerism and to buy this and buy that, and you know, we're just being sold stuff all the time, and that's not just goods; it's also narrative. You know,
Right.
And so you hopefully come to realize, as you say, one day that you need to beat the system, even if only slightly by a few percent with your money. And, you know, I've come to believe that, you know, your money, your dollars are for spending, and Bitcoin is your savings account. I will save something that's deflationary, hard money. People believe that's gold, silver, whatever it is. You know, I will save those things and spend the thing that's losing value, you know. Even if you can understand that simple concept, or if people, the problem is that they think that the Bitcoin is riskier. I think the dollars are riskier, right? So getting people on board with that thinking is probably very difficult. But yeah, I think what you discussed with credit, I mean, that's the idea everyone has. Go get the mortgage, increase the rate on your credit card. You know, don't buy your car, loan the car. And listen, there's some truth to that. Right now, like I will gladly assume debt. I would rather assume debt at this point at 0% nearly interest rates, you know, than to pay for something in cash when I can buy Bitcoin with that cash, you know, or something, or real estate, or something that will likely appreciate. But yes, most people do not put their money to work for them. Even people who have a 401k or have opened a Roth IRA, they don't know, and why would they? They don't know how to manage it. So they're probably not maximizing the benefits of it. They're probably buying something that's barely appreciating in value. Yes, they buy a mutual fund and they see that it's going up, but they don't understand that it's not beating inflation, like you said, right? So
But
yes,
inflation and the fees, exactly.
yeah, beating inflation. If you call that the name of the game, then buy something deflationary and finite and hard, you know, and that's Bitcoin. So
No,
you
right
know,
on. I think that's great. You know, so there's this element, and I coined this phrase. I do not believe I invented it, but I don't hear other people discussing. I call it, you know, this term we hear, I call it the investor mindset. And that is a way to just look at how do I interact with value exchange just in my day to day. So for instance, I can tell you 7 years ago, a typical day for me would be jump up out of bed, take the shower, throw on the clothes, make sure Dylan was getting off to school, get the truck, first thing, Starbucks.
such a waste.
$5 coffee.
Every day.
Now, keep in mind, There's a loan on the truck, right? I don't own the truck. I'm, literally somebody else actually holds the note. I'm just paying for it with interest. And that was just, and that's just one little thing. So, and lunch out, always lunch out, always
Always.
lunch out. And 4 or 5 times a week, and I don't know how much of this is because me and Dylan were two males versus, I've been a single dad since he was 1, or not, but we do restaurants 4 or 5 times a week. It was the rare occasion to actually shop and cook at home.
Right.
I mean, there'd be stuff to make sandwiches in the fridge, and
But it's also really convenient, after a long day.
very convenient.
Can't be blamed.
However, when you start, so this investor mindset is taking a look at how much of tomorrow's prosperity am I taking to have convenience today? It's the same principle around debt. When I'm bringing debt into my life, I'm stealing from the prosperity of tomorrow or the future. I never, ever thought about those things, ever. It was just the way to do business, so to speak. Now, with this new quote unquote investor mindset, it's like I look at everything in relative terms that, do I need this today? Is it mandatory? Is it necessary? If no, then excess resources can go to having my dollar today turn into $1.50 a month from now or a year from now. And it's that, kind of thing. And so people tell me all the time, I know you don't know my story. I'll make it super short. When I retired at 50, I did some soul searching in Hawaii on farms. I ended up coming to Costa Rica after I got my mind right around how I was going to spend the last couple chapters of my life focusing on how to have the little capital that I had left
Go a long way.
something for me, and then something I can leave my, son and his children, etc. And it's been 2 years down here in Costa Rica living on $350 a month for that goal and that goal alone that I spent almost my whole life taking from the future. Well, I'm going to spend now preparing for the future, having capital work to have more capital in the future. It's a really interesting mindset. It's a contextual shift. I know you have it. You've talked about it.
I didn't always have it. I was a money jackass.
Oh, okay.
I mean, I had the basis of it, but it took me until into my 30s to actually live it. People can tell you all the time, like I knew that I should be saving money, but that trip that I could put on a credit card was a lot more fun than saving my money, right? And so we all do it, and we've all been there. I will not pretend for 1 second that I was like being financially literate and actually living it are two very different things. I've been very open with the fact that I made terrible financial decisions throughout my life. I was in tremendous debt until 2006. When I sort of got a break in my DJ career and got one huge paycheck for a tour and was able to pay off all that debt and start to invest again. And I made another horrible investment decision in 2012, watched it go to zero and lost all my money again and came back from there. So I think a part of it is just, young people don't understand the importance of the future. You just don't see the future. It's not what you're thinking about. You're living for today. And I don't begrudge them that, you know what I mean? But if there's one simple fact that people should understand, it's that wealth has been acquired primarily the same way since markets existed. And that is put money away and don't touch it, and keep putting money away and don't touch it, and you'll be rich. That's literally it. Even if it's $100 a month or $200 a month or $10 a week or whatever it is, the way that people have accumulated generational wealth is by saving and not touching. And it's like the most simple concept, but so hard to do when you want, should I go out to dinner tonight or should I put $20 in the bank? Because it's $20, who cares? But those dinners you did probably cost you $10,000 a year versus cooking at home. That would have been $50,000 now or six, even doing nothing, just putting it in the market somewhere, right? Me too. Same thing. So when you do start to realize that there's that trade-off, that every single penny you can put into a market somewhere, and more importantly, not touch it. Like admit that it's gone, pretend it doesn't exist. Don't even check how well your investment's doing. Check every 3 months, every 6 months, and rebalance. You will accumulate wealth. You will. You'll double your money every 7, 8 years. You'll double that money 7 or 8 years later. So, I mean, the numbers are astounding. It's like if you put away, I don't actually like quote, but for example, $100 a month starting at 20, you'll have like $1 million when you retire. You know, if you start doing that when you're 45, you'll have like $200,000 when you retire. It's not even close. When you cut the timeline in half, you have a exponential difference in what you've saved. So if they were going to teach anything about financial literacy, it should be start saving and start saving early. Then you can go down the rabbit hole of what you should be saving in and where you should be putting that money. But even just putting it in the stock market, even when the stock market's at all-time high, if you wait 20, 30 years, you're going to make a ton of money.
Right. Well, that's the crux. It's understanding, well, I guess the law of big numbers is the first thing that comes to mind. If it's true that hard assets that are desired, right, that there's a market for, or going, over time, they're going to appreciate in value. All right, excellent. And that was the compelling story when I was a young man. It was, you want to be a homeowner. You don't want to be a renter. And there's a lot of truth to that.
Yeah, however, but you don't own your home.
And that was the part I didn't get. I went and got a 90% mortgage, right? So in essence, all the actual appreciation of the asset of my home was actually being given to the bank in the form of the interest that I was paying them. Now, keep in mind, this was not in a zero rate environment or, getting a 2% 30-year fixed. This is in the late 80s and in the 90s.
Yeah, like 14% interest rate mortgage. Yeah.
Well, well, my first one was at 9%, but yeah, they're much higher than now. Yeah. And so, when I look at these things and I get a lot of people, it's like they want to get a download, like download it to me, give it to me, and I understand that. But there's an element you kind of got to do the work too. You know what I mean? You can't just give somebody the red pill and all of a sudden all the light bulbs go off. So let me bounce this off you. Tell me what you think of this. The very first thing I directed my son to when he said, "Okay, Dad, I wasn't going to tell you this, but I listened to what you were saying, and I do have goals beyond just having a nice Xbox and clothes." I said, "Okay, cool, great. It's good to have aspirations." So he said, "Give me the download." And I said, "No, I'm not going to give you the download, but I'm going to direct you to probably the first course that you should take." And that was, I directed him to Mike Maloney's 8-part series called The Hidden Secrets of Money. Now, and I prefaced this with him. I said, keep in mind, Mike is really trying to direct you to gold, but I want you to try to look beyond the actual product of gold and think about the context of what he's saying gold stands for.
Right.
Now, if you can get that and you can understand how deficit spending and monetary policy is devaluing the world's currencies in every country, if you can understand that, then you can start to differentiate what's a good hard asset versus a depreciating asset. You want appreciation, not depreciation. So he went and did that. He comes back to me, goes, "Okay, let's talk about Bitcoin," because Bitcoin's one of the 7th episode or something in there.
Right.
I was like, okay, here's Bitcoin. Now I have my own personal opinions about various cryptos. Bitcoin, I do love Bitcoin. It's not my biggest holding in crypto. I see other things having value. Like I'm a big XRP guy. I'm a big Cardano guy. I like what VeChain's doing. So I'd say my primary holdings are in Cardano and XRP. I do have Bitcoin. I do have Ethereum. I have some vet, and that's about it. I don't dabble beyond
Right.
that as far as the listings. And everybody's free to do their own research and decide their own projects. But the point is that these are opportunities, like for XRP, if they do have addressable market and do get market share, then the sheer fact that there's only 100 billion of the damn things creates a supply demand metric that with demand comes valuation because of the supply. Okay, great. Excellent. The Cardano play, if the tech is sound and it does get adopted, then validations are going to be important. So a proof of stake protocol that is like an asset that pays me to own it is just good value investing. Capital appreciation play on the underlying asset, staking rewards on a dividend basis. Okay, great, solid, perfect. As he started going through this, he says, okay, now he's not in any of the stuff I'm in. He found Tezos. He loves Tezos. Okay, great. I got no problem with that. And I asked him why, and he says, because they're consistent with their reward value, their rewards. He goes, I'm staking. I'm seeing the reward in my wallet. I worked out the numbers on a compound interest calculator. And with a small contribution of $30 every month, regardless of the price, I can anticipate blank at the end of 15 years. I said, you've got the secret. You now have the secret. If you understand the concept, the actual names of the dials are inconsequential because they will change, right? They will change, but the mechanisms don't change. The process doesn't change. That's what I love about you and the way you present what you're presenting. You're talking about fundamental stuff.
Yeah, it doesn't matter where you get yield, just go get yield.
Exactly, and be willing to change, right?
Yeah, I mean, you can't be emotionally attached to your investments. I think that's a huge part of it, especially in crypto.
Or the
People,
process. Like my grandmother lived to 103,
wow,
always had money in the bank, donated hundreds of thousands of dollars to the church. She was matter of fact, the church got everything.
classic.
Different story. But the point is, she got all that from bonds. She was able to do that with 10 and 30-year bonds starting back in the 70s.
Yeah, I mean,
You
can't do that anymore. Yeah, I remember people giving me bonds when I was a kid and me being like, so here's a $30 bond. I have to wait, 15, 20, 30 years for my $15 to turn into $30, but it did.
Exactly. I had to wait.
I forgot they existed by the time it happened, but that was like a very popular. I was, when I was a young teenager, 12, 13, 14 years old. So in the late 80s, that was a very popular thing for like parents, friends, and grandparents to send you a savings bond.
Oh, eat $50 savings bonds at Christmas?
Yeah.
Oh yeah. But I
cost $25 to buy it. So,
Yeah, boy, those were the days. It's interesting to think that although the names have changed, these mechanisms that are sound haven't changed. So the idea of, i.e., find a product that produces you a yield. And there are many. The stock market has many
dividends,
dividend stocks. There are funds. Now, I'm not a big fan of funds because funds come with all the fees,
right? It's very hidden,
administrative that and all that kind of stuff. But for some people, it's really cool. Let me ask you a question. What do you think of kind of this reinvention of a digital financial system alongside the existing? Case in point, there's an outfit called I Trust Capital, which does a crypto IRA, and they have a sizable inventory of digital asset products in their IRA.
I love it.
Are you
I love
familiar
it.
with
So
iTrust?
here's what I don't know I trust, but actually it's funny. One of the sponsors of my podcast is a company called Kingdom Trust, and they have a product called Choice IRA. Very similar. And I love it because I think that that the classic retirement accounts are extremely restrictive. They only allow you to invest in certain assets, and that's absurd. Why should somebody tell me what I can buy for later and get a tax break on, right? I mean, I should be able to buy whatever I want. I'm a big boy. I put on my big boy pants and decide what I want to spend my money on, right? And the American government does a very good job of protecting consumers, but the downside of that is that it generally also eliminates your options, right? I talk about it all the time, but like you have to be an accredited investor if you want to invest in your friend's business idea. Like it's just absurd that like you can't invest in something with venture capital unless you're already rich. But that's a whole different conversation. I mean, if we're talking about IRAs, yeah, you should be able to trade Bitcoin tax free in your IRA. You should be able to invest in Bitcoin tax free in your IRA. But not only that, Kingdom Choice, like you said, they have this huge portfolio. You can buy fishing rights and farmland and cows, cattle. Like they have rare fire trucks that you can invest in for your retirement. Literally anything you want to buy, they put it in the basket and you can do it. As a trader, the benefits of that are insane because if you've been saving in an IRA for 10, 20, 30 years, you've built quite a bit of capital in there, and the short-term capital gains on trading in the United States are exceptionally high, especially on cryptocurrency where they consider it taxable when you go between cryptocurrencies. So you haven't even gotten to cash yet and you're getting taxed. You can do that all tax-free in your IRA. You just trade. As long as you don't take the money out until you're retired, you can trade endlessly in there. So I mean, I think that products like that are extremely important. I hate the idea of being told what I can and can't invest in and what's smart for me, because I don't believe that we live in a one size fits all world where, everybody wants to invest in the same things. Like you said, you may not care about Tezos, but you love that your son cares about it. And you love that he took the time it's not because someone said, hey, this is the thing you need to do. He did his research and he decided, right? Shouldn't he be able to put that in his retirement account? Right? He did his research. He went down the path. He found out what he needed to know, and he made a decision as an adult. And I don't like the idea to be told that's not possible for me. So yes, I think the self-directed IRA is amazing, and those products are really, really important.
Like I have a Schwab IRA, I have a Roth IRA with my Schwab brokerage, which is free, no fees, dimension free, and no fees. That's what I want.
IRAs have fees. It's kind of
well, my Schwab Roth IRA doesn't.
None, right? Yeah, and now most companies are also moving to free trading. Like commissions are kind of becoming a thing of the past, which I think is amazing.
Right, they're making their money in other ways. The only exposure to the digital asset world that you and I love through my Schwab Roth IRA is the Grayscale GBDC.
Yeah, but you're right, which is amazing. I own some, to be honest, but
so do
it's
I.
at a tremendous premium. I just own it like in principle,
I have brokerage accounts at Schwab for my children, my two children, and I have contributed GBTC to their accounts, and one pharma company that I think is going to revolutionize everything, that is OTC 1 cent. Pharmaceuticals. So if those, if I think Bitcoin's got a huge future, I think the digital asset space has got a big future. I'm really excited about things like bonds and corporate and government money to fund projects going through DLT bond structured vehicles. I love that idea because it eliminates a lot of the fraud or potential corruption or mismanagement of funds, that type of thing. Do you have thoughts on any of those interesting elements of the digital asset space?
It's really not something I've spent that much time on, to be honest with you, mostly because I believe Bitcoin kind of does it all.
Oh,
Like, I believe if you just buy Bitcoin, you're going to be fine.
really? Now, okay, this is not meant to be adversarial because I have the
No,
deepest respect for you at all.
no.
But so I'm an investor, 54 years old. I'm not an economist, but I kind of have a macro view of things. So when I look at Bitcoin, it checks boxes for store of value, a deflationary asset, all these things that I love about money. Here are some things that I don't like about Bitcoin, and I don't understand how they're going to solve these problems. And that is speed of transactions, power consumption issues, and the fact that its entire security is based on a validation model that is going to exhaust itself. Finite
I don't
limit.
necessarily agree. I don't necessarily agree with the latter, but I think that regardless, the store of value is all we need. That's my point. So yes, I understand that. I agree. It's not the best money, but it's the best store of value. So when we're talking about ways to make money for your future, that's what I care about. I don't care if it takes me an extra 5 minutes to send it, and I can send things with XRP. I've done it. I've converted to XRP, sent it really fast, converted back because XRP is lightning fast, and there are plenty of blockchains and plenty of projects that are far superior to Bitcoin in plenty of ways. But I still think that Bitcoin remains the best model for storing value, which you said, and that's what I want in my savings account.
No,
I don't.
I agree completely. I'll be long gone from the face of this earth before the mining rewards are exhausted in the Bitcoin network. But
Sure.
my children won't be. That's the part nobody in the Bitcoin world.
I understand what you're saying. Like what happens when there's no reason to mine. Yeah, I understand
and
that.
then the security goes away. And that's the part I don't get. I'm not a Bitcoin hater. I'm a Bitcoin supporter, but I'm not blind to what I think are liabilities. And so I want to talk about them because maybe there's something I don't see. And
there's people much smarter than me who have. Well, I've thought about it, and to be honest, I'm blanking. But there's a lot of people who have written about how that's accounted for in the network. So basically, there's still margin there for the miners, and there's still a reason for them to continue mining, even when you're coming to the end, and the mining rewards are much smaller. And we've seen that with every halving, right? Every time that there's a halving, miners still continue to mine and they continue to make money, even though the reward is half. So, I'm not.
The value of the underlying asset rises.
Right.
You couldn't do it at $300 Bitcoin right now.
Well, yes, there's certainly a miner's floor. But miners have to take profit. I mean, that's I think the reason that we've seen a drop in price of late. It's amazing. You can look at it on a chart. Anytime there's a major outflow from the miners and inflow to exchanges, price drops.
Yeah. Well, supply and demand. I am so tired of the narrative that the market, all crypto's just market manipulation, blah 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 blah.
Oh, I think it's the opposite. I think it's the only free market. It's the only free market we have. What you just described is the stock market.
Ding 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 ding.
Manipulation. It depends on how you define the concept of manipulation. People in this market describe something as manipulation anytime they lose money. So everything's a scam. Everything's manipulated when you lose. Price went down. It should have gone up. That's manipulated. Some whale dumped on me. Like as if you're so self-important that person was coming right after your order to make sure that you lost money, which is not the case. That is the nature of a free market. In a free market, there's a buyer for every seller, and there's people who have a whole lot of money, and there's people who don't have much. And your goal, if you want to trade it or invest in it, is to be on the same side as the guys with a lot of money. And you have the power and decision-making and cognitive ability to decide how you're going to attempt to do that. And that's all you're doing as a trader. You're trying to be on the, you want to be, you don't want to be the liquidity for the bigger guy. You want to be riding on their back. You want to be one of those tiny little fish that swim behind the whales, eating plankton off of it or whatever. Sure. And to stop printing money, buying corporate bonds, these things, that's manipulation. That is manipulation on a grand scale. It's cronyism. There's absolutely no free market. The little guy has no chance. They're going to bail out the big guy no matter what. And the little guy is going to be left there wondering why he's getting no interest on his savings and his money is not working for him. That's the reality. That is not the case in the crypto market. Yes, if you believe that manipulation is that a person with a whole lot of money can move price, then yes, it's manipulated. But that's not really the definition of manipulation in markets.
Right.
That's just a free market. It's a free market and you're pissed that you lost money in it. That's the reality.
Man, you know, I liked you before this chat. I like you even more. You're a good man, Scott Melker.
Thank you, man.
I want to, we've got a minute or so left, and I want to make sure that everybody who's watching this, Scott's Twitter handle will be in the description of this video. If you're not already following him, go to Twitter, follow this guy. On his profile, he's got the link right to his .io podcast on the web. What a diverse catalog of content you have. We're talking pro athletes, billionaire investors, tech gurus, politicians, artists, heck, professional athletes that became artists. I mean, an eclectic group you have on there. And the same in my channel. I've got billionaires, I've been pro athletes, Navy SEALs, Hollywood producers. You know, I've got a pretty eclectic group myself. And I appreciate diversity, and I know that you do too, because I see it reflected in your content. So folks, go check Scott's stuff out.
Thank you, Jerry.
Wolf of All Streets is really an incredible contributing member of what's good on Twitter, what's good on social media. You're not going to get him lambasting people, calling people idiots if they don't agree with his particular point of view on something. You're going to get an educated, thoughtful man. I'm going to support you.
Thank you.
I hope that you folks will too. Scott, any last words for the audience before we close out?
Not at all, man. I think what you're doing is great. And I really appreciate it. And those words were definitely too kind. You know, at the end of the day, like everyone else, I'm just a guy out there who's trying to, you know, get through it and do the best I can for myself and for my family, and to, you know, leave some sort of positive, you know, footprint on the world when I'm done. And, you know, I think that everybody can do that. You touched on a lot. I mean, you just kind of were talking about my Twitter, and, you know, I think we all have seen the toxicity there, and when people do go negative, and it just makes me a little sad, you know, because it's so unnecessary. And I really believe that if all of these communities and everybody would just come together and work towards the same common purpose, which is advancing this financial literacy, advancing the cryptocurrency space, we would get so much further, so much faster, you know. And at the end of the day, that's really my goal. It sounds corny, but it really is my goal, you know. And you just see people going at it, and it's like this battle of egos, and none of it really matters, you know. All that matters is that we go out there and get more people to understand the importance of this and to believe in the cause. And, you know, that's what I wake up trying to do every day. And I hope that we can just, people like us, you and I, can influence more people to do that, you know. So I encourage you to just keep doing exactly what you're doing and getting as many people out here and getting the word out. And I hope everybody else can do the same in their own little way.
Right on. So folks, there it was. Hope you enjoyed the conversation. We'll see you next time on 101. So, pura vida.